continue to have a lot of luck with just the key support areas and resistance areas and fading them. Again, yesterday, we talked about in the morning meeting, said I had a script into the 213 area, got long, sold a little bit early, overshot to the upside, actually shorted into this. While I was off the desk, we melted right back down to the support area. We were gapping above this 214.50 to 214.60 resistance from the last few weeks. We just haven't been able to really consolidate above it. But just a lot of times, this buying through this has worked really well. Very little risk. Looking to see if we can start to spend some time. The last time we closed above 1460, the next day we opened above and went boom right back down below. Yesterday we tested the support, now we're right back above. Suppose a close above 215 is what gets people thinking about the next resistance level. IWM 120 has been the support since September. We went through it yesterday. About the half. Close back above 121.5 would catch my attention, but would really have to close above 122.5 to kind of break this, the sellers being control on this downtrend that's forming here. Let's see a close up here. That'd probably get some people very interested. See if it would come back and test the high. All right, a bunch of stuff to cover. First one is Tesla. They reported after the close. It was a solid quarter, nothing spectacular. A couple of takeaways from the quarter were, one, they're not raising any money. I would think second half of next year when Model 3 starts to ramp up, they're going to have to raise money if they want to really push production levels just to pay for raw goods, raw materials. And so that, I think, was one of the driving factors. But overall, if we take a look at it, I'm still waiting to see if they can contest that 190, the longer term support. Tried again a week and a half ago, didn't quite get there. It's run up now a couple of times into the 215 area. It failed here. That brought it very quickly right back down to the 190s. I'm sure people are watching this again to see if it'll come back down to the 190s. The short trade, the first short we look at short triggered in this. We had the run up. We spent a couple of months consolidating above 220. We broke that 220. It was right back down to the mid 190s. So any type of consolidation above 215, the thought process has to be they can run it back up to where it broke down from. A close above 222-ish, I think scared the bejesus out of shorted. From a big picture perspective, it continues to be, you know, the weakest of all the momentum stocks. This breaks right here, like I said, if this gets a close above 220, that's going to get some people very, very excited to pile in. And look at the one that last time, this was coming into, they were expecting some bad news coming into earnings. This thing was a rocket, 260. Twitter. So Twitter, 18 is kind of an inflection now, it looks like. I listened to the conference call. It was solid. you know, they'd really lowered expectations coming into this earnings report, and they beat the numbers. They're still growing. The revenue line. I actually thought the way the stock was coming off when they had no deal into the 16s and below 17, that they would actually miss the revenue number. They didn't. They beat it pretty easily. So I think there's a floor on the stock now, probably 17. This was the flush after there were no one interested in buying. Spent a few days down here. Then they pushed it back up into the low 18s. So you could argue 16 and a half to 18 and a half is kind of the range if they flush it through 17. A close above 18 and a half, maybe as people start to think about it running to $20 again. There was initial reaction this morning. It did get to 18 and a half, pulled back. They were buying it in 17.90. Looks like they tried to push it there again. So just from an opening perspective, this area here, see if it gets bought, see if it pushes back up to this 1840, 1815 area. Next one is CLG. I found this over the years to be a tough stock to trade, but the way it was reacting, they beat revenues and earnings by 5%. And by the way, on Twitter, they just said they're not doing guidance for next quarter and next year. Just the way they were talking about it, it sounds like there's a wide range because engagement has picked up, video advertising has picked up, and they probably think there's some good upside there. But if they start to give a wide range and people build expectations, they might be disappointed. So, but I would expect a pretty solid quarter next quarter based on the tone and the things they were saying. So looking at the CLG and the 5% beat, so it's a pretty strong downtrend, lower high, lower high, lower high, lower high. So now what you're looking for is, can it hold above the most recent failure, which is 101? On the open, you want to see that if it pulls into there, hold 101. And then when it close above 102.80, 103 area, maybe people start to think of it breaking out of this downtrend. I put 104 as the next potential resistance, but if you look at it, if it's strong today, really is more like 105 and a half, what people start to think about. This area here. Had been support, broke from there, came back, held it, then held it again as support, and then it acted as resistance. So normally does 3.7 million. They're on the conference call right now. You can actually see in the pre-market already, it did hold this 101 right at 8 o'clock. So that's what I'll be looking at right at the open, this area here. And you can kind of see the potential from there. It bounced $2.50 from that level once already. INFN. I just put this on here because I happened to be long it from the last time it gapped down into the 8s, and I had sold most of it a while ago. Here's the daily. So it gapped down here. I think I was long from this day. Went up above to 9 and change. I think I sold some and went back up again and failed. But it's actually gapping. It's gapping down $8. So I thought the numbers were okay in terms of the revenue came in line. And they're already gapped down here earlier. So I guess they look at it as, what does it do at 8? And it's 830 to 840 area. If it's going to be weak today, it won't get back above this little band here where it's supported. If it gets above that band, then it's just back inside of this trading range from since the last time they reported. WDC, this one has started to show signs of life since it bottomed over the summer. We know recently it gapped up above 50 and then ran to 60. I didn't actually see it come back down to 52, which is a pretty good buy. People bought it ahead of the quarter yesterday. You can see a pretty big move coming into the quarter. Closed here at 56.5, and now in the pre-market was already topped out right back up here at the 60 level. So people really like this number, and I've seen a lot of positive analyst comments, raise targets. They could be pretty aggressive trying to support it around 58 here, 57.80. So here's your initial reaction, 60. It's drifting lower now, right on the open. I'm going to look at this spot right here to nibble. And then for quick confirmation, you want to see it start to get back above 59 and hold. You know, if it flushes to here, it starts to pop. You want to see at least once or twice the bid hold while getting hit, and then you start to think about the pre-market or the after-hours high, which was 60. Close above 60, becomes a swing trade. Qualcomm. So they finally closed that deal, or announced that deal to purchase NXP. Here's what it looks like on the 30-minute. So originally they were talking about them paying 120 to 130 a share. They ended up paying 110. So it's pushing it up higher. They got a better deal than people were expecting. The market really likes this deal. I would think that it would be bought into the 70 area here on the open. Worst case, closer to 69. If it were to go lower than here, I'd start to be thinking about sell the news. But buying into this area here or to this area right here, a little bit lower. Here's the daily. It's quite a comeback. I was trying to buy the stock in the low 50. Let's see what they took it to. And this thing started to come up from 80. I think we bought it here in the low 50s, and it bounced back up. Thought that was the bottom. It came back down again. They crushed it, came all the way down to the low 40s. And I just stopped trading the stock because just the amount that it overshot to the downside I thought was beyond comprehensible. Now it's coming back into an area where this is a tough area here. You say the top was 80, 10% below that area is about 72. So 71 to 72, I think it could have a lot of trouble getting above that. It could actually, when you start to form a consolidation, something like this.
Right. Yeah.
Tends to be a tough stock as well. That's why I split it last. All right, so Gorman yesterday. So now I managed to make money on the long side on that one. I guess what happened was I bought it into 51 here, and then it popped back to 52. I sold some, and when I got stopped out, I had those sales from this 52 area. Certainly, if you were on the desk and you saw it take out the morning low, being short below 50.90 was a good idea for the gap fill to 49.50, and that's what you got pretty much for the penny. We'll see now. I would use 50 as an inflection. A lot of times what you'll see happen on the second day in a name like this is some of the bigger hedge funds will decide if they like the quarter, they'll buy on day two. And the way that we'll look at it is it'll just get above $50 and then get above 50.20. And then you'll just see it kind of come back to levels from the prior day. If hedge funds didn't like it, you'll see it start to hold below this 49.50 and start to come back down into the support from the last few weeks, 48 to 47.70. Boeing, good example of why sometimes it's good to listen to the conference call. It sold off about $5 from the pre-market down to 137. During the conference call, consolidated just below 139. They said something there, a couple of things that were good, popped above, and then the next thing they said drove it to 142. then had a third leg to 145, then even went higher. But looking at it for today, 144 here, where it basically spent the afternoon. 144.20 to 144, I'd be looking to see if that continues to support there. And then Apple, we talked about in the morning meeting yesterday that you could kind of justify the sell-off, but the psychology had changed, so maybe we wouldn't really have a deep pullback. That's why I started buying it after covering the short below 114, and we had a nice bounce to the one. I don't even remember where I sold it initially, but it did actually have a nice pull-in from 115.70, came in about $1 before closing right back up at the high. So the psychology is very good in this. If it wasn't good, you could have easily seen it testing 112.70 to 112 area. I guess the way I would look at it is if it gets a close back above 116.40, gets inside of this range again, then you can start thinking about it testing the top of the range and even running to 120. If it gets below 114.5, you can start to think about it coming in and testing support from yesterday. So you have some pretty good levels to work off of on this one. So apologize for the late start today. I really do want to start to try to wrap these up by 9:05. But I was listening to the Twitter conference call and doing some other stuff. So. As always, be patient and good luck.
Hope you enjoyed that video. You can actually watch that video if you're subscribed to our Trader 90 before the market even opens. What stocks are in play? What levels in those stocks are important? And how we might go about attacking that stock. That's Steve Spencer, 20-year veteran trader, laying it out there every morning before the market even opens. A really, really powerful tool to start your session off on the right foot. So right now we're offering a trial that you can take advantage of to access this meeting and other meetings throughout the day. We have a meeting at 11 a.m. Eastern where you can sit down with Mike Bellafiore and listen to him talk about what's going on during the morning session, what stocks were in play, what the best trade opportunities were, as well as maybe some things that we're looking at heading into the afternoon session. So I really encourage you to take advantage of that trial.